oh, this is just like March 2009. Like, in what way is this like March 2009? I mean, other than the fact that you've had a short squeeze of the crappiest stocks, but in 2009, you actually had a Fed that was printing money at a rate we hadn't seen in decades. They were buying bonds. They were not, trying to shrink their balance sheet. So to say this is like 2009, just silly.
If you are interested to hear Mark Yusko's thoughts, just keep on watching here at Market Empire and don't forget to subscribe to the channel. Despite the fact that Bitcoin and Ethereum have been trading in the red over the past week, with Bitcoin trading for $22,907, which is a decrease of 3.7% in the last 7 days, and Ethereum trading for $1,627, which is a decrease of 1.2% in the last 7 days. The sentiment for the overall market is positive after Fed Chairman Jerome Powell announced a 25 basis point increase in January's jobs report. Came back shockingly good, with Nonfarm. The percentage of unemployment reached 3.4%, which is the lowest it has been since May of 1969. After experiencing one of the environments with the highest inflation rates in decades, investors and analysts are starting to believe that because of all these measurements. Mark Yusko, an investor, does not believe that a soft landing is in store for the economy, despite the fact that the economy is moving in that direction. On the Blockworks Podcast as a special guest, Yusko shared his thoughts on the current state of the market and how he sees it developing. Yusko is of the opinion that the Federal Reserve and other powerful institutions are manipulating statistics and numbers in order to create the appearance that the market is performing well. During this period, Yusko was the first person at his hedge fund in the past 20 years to be forced to let staff members go. Yusko implies that the information they're giving us and the events that are taking place in the real world are not consistent with one another.
It's like, I say this all the time, that, sitting down, I'm 6'3", but when I stand up, I'm just under 6 foot because I have no legs. So X legs being short, I'm a really tall guy. It's just such nonsense. First it was X food and energy. And I was like, oh, geez, well, this shelter piece is kind of volatile now. It's not supposed to be volatile. We kind of engineered it to not be volatile over the last 20 years by turning it into owner's equivalent rent. Well, then rent spiked. So the manipulation of the data to fit a narrative is reaching torturous levels. So but people believe narratives. I mean, that's the thing that I just don't understand, right? There's all this data in front of people that they can look at and they could form a conclusion. But instead, they just listen to the man behind the curtain, right? Saying, oh, ignore the man behind the curtain. Hey, that person you see who isn't really the great Oz. I don't know. I'm frustrated by the way people listen to drivel and don't actually look at the data. So we are right back to the idiocy of, and I really mean idiocy. I mean, it is idiotic, completely idiotic, to say that because interest rates are increasing less quickly, that somehow that means there's this wave of liquidity to push up stocks. That said, when everyone's on one side of the boat, when everybody's short, and literally everybody was short, like all the hedge funds, all the institutions, all the banks, everyone was short. Rightfully so. I mean, you mentioned Carvana's making a comeback. No, they're not. Carvana's going away. Carvana, you've seen the pictures, right, of the empty car vending machines, and they're not coming back. They will go bankrupt. Their equity will be extinguished. But boy, in the short term, what's it up? 350% in 5 weeks. So people are like, I told you, Yusko, that's a great stock. Like, no, that is a lottery ticket that the expected value of every lottery ticket is zero. right? Except one. I mean, one has some value, but the expected value, I guess it's not technically zero. I guess it's 0.0000001 cent or whatever it is. But the average person, makes their contribution to the lottery and, gets their 5 minutes of entertainment. And I don't understand it, but tax on the poor. Although I know some really rich people who waste their money too, but I think, generically it's a tax on the poor. But I'm really struggling because, like Jim, I'm a value guy, and I actually like to run analysis of cash flow and earnings, but these companies don't have that, and they're soaring on hopium, literally hopium, that there's going to be some increase in Fed liquidity. Now, look, it is true that financial conditions since October have gone straight up, right? There's been a massive unleashing of global liquidity, first by the Chinese, then by crazy Kuroda-san, who, it's just amazing. Okay? Yeah. Kuroda did more QE in 4 days a couple weeks ago than all of the Fed's QT in 2022. So, I get it that, don't fight the Fed. Well, now it's don't fight the global central bankers because it's more than the Fed. But the Fed has not done any easing. And here's the part that's really hard for me is stocks are supposed to be a discounted stream of future cash flows, right? That's the value of the equity of a business. That means there should be cash flow, and in a lot of these businesses there aren't. 40% or 40+% of Russell 2000 stocks have negative cash flow. They have no earnings. They're losing money, and so I don't know. I'm struggling. I don't think the Fed has anything to do with what we call inflation. It's oil prices and used car prices that were triggered by the base effects of shutting an economy down, then turning it back on. And look, CPI perfectly correlated 16 months after M2 growth. M2 growth went negative for the first time in, I think, 96 years. Let that one sink in. It's been 96 years of constant money printing since the Fed was created to diminish the value of the currency, to steal wealth from the masses and give it to the people at the top, which, right, income and wealth inequality is where it is. So mission accomplished by the Fed. But the challenge now is, again, I don't know, all of this is literally nonsense in that there is no pricing power for employees. How many announcements of 10,000 workers being laid off have you heard in the past month? Every single day, another company is laying people off. Our company, for the first time in 20 years, we had to let some people go. It's just never, we never got to that point before. This has been, and this idea that, unemployment rate is so low. Well, no, it's not. It's because you're fudging the numbers. Again, the massive engineering, right, by taking people out of the labor force, making the labor force seem smaller, so the percentage of unemployment, those people are still working. But just because they turn 65 doesn't make them out of the work. That's the way they do it. And the birth-death ratio nonsense. So I hear the narrative that people have crafted, and I hear the torturing of the data, right? If you torture the data long enough, it will confess. The torturing of the data continues, but you go around and you look at economic activity, which is the true measure of whether wages are good or not good, or economic activity, it's not so good.
How do you feel about Mark's assertions in this piece? Do you believe the upbeat predictions for the market or do you think it's doomed to fail? Leave a comment with your ideas down below, and we appreciate you tuning into Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.